Well, welcome everyone. Welcome to Office Hours with Michael Kitces. So for today's episode, I want to talk about financial planning in the workplace as an employee perk. And more specifically, financial planning in your workplace as an employee perk. In other words, offering financial planning as an employee benefit in your advisory firm. So this week's specific question comes from Dan, who asked, we're trying to formalize our policy regarding financial planning for our own employees. And it feels weird to offer our services to the whole world, but exclude the people that mean the most to us, the ones that work for us. So we think we want to do this in-house, but we're concerned about the privacy issues and the inherent conflicts between employee and employer. How do other firms handle this? So I love this question, Dan. I think it's fantastic that you're rolling out financial planning as an employee benefit in the advisory firm. And as you noted, it is more than a little ironic to me that we talk so much about the benefits of financial planning as advisory firms and then don't give employees any opportunity to experience that benefit. Because what that really means is that the firm ends up talking about the value of financial planning, but the employees themselves, who maybe can be the biggest advocates for the firm's services, can't really talk about its value because they've never actually experienced it themselves. Or viewed another way, if you really want employees to be more engaged and excited about the value of financial planning that the firm provides, try putting them through the process. At a minimum, to receive an upfront plan and ideally ongoing financial planning as well, right? Not just the manage retirement assets in the company 401k and profit sharing plan, which I know a lot of advisory firms do already for their employees, but actual one-to-one personal financial planning. But as Dan notes, offering planning for employees is one of those things that's actually much easier said than done. The first question you've got to evaluate, if you're actually thinking about doing this in your own firm, is whether you want to do it internally or externally. So offering financial planning internally means the firm actually does the financial planning internally for its employees. So you might have a particular advisor whose job is to do the financial planning for all the employees who want it. I've seen a few firms specifically give this work to their associate advisors, as it's a good opportunity for them to get some client-facing experience delivering financial planning in a supervised environment and without putting actual external client revenue at risk by having them learn on clients. Or you might make 2 to 3 advisors available, because it can be particularly awkward for someone to be assigned an advisor that is their immediate team coworker or their direct report. In other words, if you're an advisor and it's your operations team member or your paraplanner who reports to you for employee reviews and raises, and then you're the one doing the personal financial planning about their family finances, that can get a little bit awkward. That for most people crosses some comfort lines about advice in the separation of what I make and the person who sets my salary. And in point of fact, I think that actually raises what I think is the real issue with trying to do financial planning internally for employees, which is all these conflicts of interest and potential privacy issues that crop up. I mean, after all, what if their financial plan includes a desire to leave the firm and go into another field? That's a problem to disclose to the planner in your firm, and raises real issues about whether that person might be passed over for opportunities. If they've disclosed in the planning process they're thinking about leaving. And then what happens if they don't leave? Now they're stuck in a firm where they're not going to get promoted because the firm thinks they're going to leave, even though they're not planning to leave, but they disclosed it in the planning process. Or maybe they're planning to stay, and they're trying to figure out how to save enough money to make an offer to buy the founder out of the firm. You might want to talk through the issues about buying in before you actually tell the founder you're planning to do so, which may be hard to keep confidential when the planning is being done internally. And more generally, just, I'm not sure it's always comfortable, if it's always comfortable even for employees to be asked to disclose all their personal financial details to someone who is also a coworker. I think one of the benefits, frankly, of a financial advisor in general is someone to work with that you can have a professional relationship and be confident that you won't be judged about your financial situation. And that's harder when you also have a personal relationship with your advisor because it's your coworker or colleague in the firm. And so as a result, most advisory firms I've actually seen that offer financial planning as an employee benefit do it externally. The most straightforward approach that I've seen is just engaging in some kind of reciprocal agreement with another similar sized advisory firm where you say, we'll do financial planning for your employees, you do financial planning for our employees. So now your advisor may be doing employee financial planning and spending some time doing the plans, but not for your employees. Your advisor does it for their employees. Their advisor does it for your employees. So the employees get served, and the staff time commitment's the same, but you've separated out all the internal conflicts of employees being maybe a little too privy to personal financial details and goals of other employees and colleagues. And, you can set appropriate restrictions in place that says, you can't solicit the other firm's employees once you're building this relationship with other firm's employees and vice versa. Now in this scenario, you will likely to have a cost to actually pay the other advisory firm for their services. Now again, if you're doing planning for their employees and the firms are in similar size and they're doing it for yours, then presumably they'll pay you about as much as you'll pay them for these reciprocal services. So the net result is even, but employees now have a bona fide paid financial planning engagement from an external professional. Now the biggest caveat with this approach actually, I think, is just that sometimes the firm you're working with and partnering with may not actually have the expertise to help your employees, nor will you necessarily have the expertise to help their employees. Because the truth is a lot of us tend to work with fairly affluent folks. We may have minimums that are hundreds of thousands of dollars or millions or more. Your employees may not be qualified for your services and vice versa. Now, you can waive the minimums and have an agreement to do that, but the truth is that you really just may not have the expertise to help the average employee, because the issues might be about short-term goals, cash flow, budgeting, career management, or simply handling debt. Do you know how many of your employees are struggling with credit card debt? Are you prepared to help develop a 3-year roadmap to repaying the debt, navigating debt consolidation services, and repairing their credit scores if that's what their planning needs are? Do you actually have the expertise in that? Which takes us to the third option, that a lot of firms I see that do this just give employees a budget for financial planning and let them go and find their own advisor. Someone who really has the expertise to address their problems and concerns. And the employee can control it and find someone that's a good fit for them. So if they just want some hourly advice on a periodic basis, they can go engage someone from Garrett Planning Network. If they want ongoing financial planning advice with someone who specializes in working with younger clientele, like the employees of so many of our advisory firms, they can hire an advisor from XY Planning Network for $100 or $200 a month. And frankly, you may find that when you work with firms that are actually targeted to working with, we'll call them rank and file employees, like the ones in a lot of advisory firms, that the pricing is less expensive too. For a lot of larger independent RIAs that have a lot of employees that may need this service, the challenge is they often have several $100,000 account minimums, or might have like a $5,000 minimum fee. And so even if you work on discounting that, it's expensive to provide the planning. While you might find advisors in places like Garrett Planning Network and XY Planning Network might have no asset minimums. Typical annual fees could be as low as $1,000 or $2,000 a year, which just makes it more affordable as an employee benefit to offer, in addition to maybe better matching the employee to an advisor with the right expertise. And letting your employee go and find their own advisor actually is a really good opportunity for them to see what it actually takes to find an advisor. I mean, what prospective clients go through in finding advisors in your firm. Really gives them insights about how to make the advisory firm's marketing better based on their own experience in trying to find an advisor. And you really, like that last point, I think, is actually one of the big indirect perks of having your employees get financial planning as a benefit, which is that they get to experience what it's like to be a financial planning client, both in the process of finding an advisor, onboarding with an advisor, working with an advisor on an ongoing basis. Rick Kaler, who's a financial planner from South Dakota, published a wonderful article, I think now nearly a decade ago, in the Journal of Financial Planning about the benefits of financial planners getting their own financial planners, not just for the actual benefit of third-party perspective on your financial planning needs, but because it's also such valuable perspective to improve your own experience for clients once you've experienced financial planning as a client. And I think it's equally true for all the employees in your firm that touch the financial planning process. Not only do they get better perspective on what the firm really does and the value that planning provides, but they can actually get ideas about how to do it better in your firm for your clients based on the experience they have in someone else's firm as a client with some other advisor. And that's beyond, again, just the actual benefit of providing financial planning to employees. Earlier this year we had Liz Davidson from Financial Finesse on the Financial Advisor Success podcast. So for those of you who aren't familiar, Liz's firm provides workplace financial planning benefits to mid to large size firms. That's what they do. And Liz talked about some of the recent studies that have come out showing empirical data that employee financial wellness leads to everything from reduced financial stress to employees, cuts down on absenteeism, helps them make better decisions to utilize their employee benefits, which then makes them more satisfied employees because they feel like they're getting more benefit from their benefits when they use them properly. There's even some data to suggest that better financial wellness for employees reduces turnover. Because when people have a better relationship with their money and their income, they're less likely to job hop to another employer who offers them a small raise when they become more effective at enjoying life with the income they've got. Now, before we wrap up, the tax nerd in me does feel compelled to point out one other issue worth recognizing if you're going to do financial planning for employees, and that's the somewhat unfavorable tax consequences of doing so. Because unfortunately, financial planning is not recognized as one of the various tax-qualified employee benefits perks that you can offer employees tax-free. You can't offer financial planning through a Section 125 plan, or you can pay for it directly and it's a deductible expense for the business, but you would have to include it in income for the employee. That really becomes the issue. To the extent that you pay for financial planning services from the business on behalf of an employee, it's part of the employee's income, which means you'll have to report it to them on the W-2. So if you give them $2,000 a year to pay for financial planning, they're going to have to report another $2,000 of income on their W-2 and pay taxes for it. Indirectly, that's actually one of the upsides of keeping the financial planning internal. If your firm's advisor employees do the work for the rest of the employees and no money changes hands, there's not really anything to report on their W-2 for tax purposes. Technically, if there's a going market rate for the services that you give them, it's probably supposed to be reported as employee compensation and still be phantom income to them. But arguably, it's a gray area when the firm literally doesn't charge for it and no money changes hands and there's no reciprocal services. But the moment there's actual dollars on the table or a reciprocal agreement because you're paying another advisor or firm or you're doing planning for their employees in exchange for them doing yours, when there's a value exchange and the employee gets financial planning benefits, that's compensation to an employee, reported on the W-2 with some tax consequences. Now, if the amount of money that you're giving them for financial planning is moderate, the fan income shouldn't be hugely problematic, but it is important at least to warn employees about that the tax withholding for the financial planning benefit may slightly impact their take-home pay. And yes, you could give them a bonus to help them cover the taxes, but then, of course, the bonus to cover the taxes is itself taxable. So you have to go through the circular math just to figure out how much to re-bonus for the taxes on the original bonus, which itself was a bonus for the taxes on the financial planning employee benefit. Kind of gets messy. Now, again, this shouldn't be a deal killer. I mean, just practically speaking, for a moderate financial planning fee and an employee in the lower and middle tax brackets, this might only be a few $100s of taxes, which spread across the year might be no more than $10 or $20 per pay period in tax withholding to receive the benefit of comprehensive and ongoing financial planning advice. But be cognizant of the tax consequences. Perhaps at some point, Financial Planning Coalition will take up the challenge of advocating for better tax treatment for financial planning services. But for the time being, you got to be prepared for the tax consequences. The bottom line, though, is just to recognize that offering financial planning as an employee benefit can be done. Actually, is a especially good employee benefit, I think, to offer, as it not only brings the actual benefits of financial planning into the workplace, but also the additional perspective of employees of what it's like to benefit from financial planning and what that client experience can be like, which may help them bring new and fresh ideas back to the firm to improve the services for your own clients. But if you're going to go down this road, give careful consideration to whether you actually want to deliver the service internally or send employees out to other advisors and firms, and whether they're going to be sent to firms that actually have expertise in their needs, or if it's better to just give them some dollars and let them find their own advisors to match their own needs, which, again, can be a good learning experience about what it's like to be a prospective client unto itself. So I hope that helps a little, some food for thought. This is Office Hours with Michael Kitces. We're normally 1 p.m. East Coast time on Tuesdays, obviously a little bit late this week, but thank you for joining us, everyone, and have a great day.